Hey guys, it's Rich with Spokane Home Guy and One Property Network, and I'm joined again with Mike Hogan from Chimney Rock Mortgage, and we're going to give you guys a real estate update for the month of December and chat a bit about where we're at with rates right now and where those might be going. It's pretty exciting to come off of October highs.
Totally. Yeah, absolutely.
Yeah. So for medium home prices, we did see those slip a bit in the month of December. Those came down anywhere between 6 and 7% for that month, putting us year over year flat to down 1 to 2% for real estate. So, low inventory levels kept pricing really stable, and now with rates coming down pretty substantially off their highs, I think, and still low inventory, I do suspect that pricing's going to stay stable, if not increase a bit. And so we'll chat a little bit about mortgage side of the house, and people should be excited, I think.
Well, yeah, I mean, as you highlighted, rates have come down really basically from their highs of October, where rates were hitting 8%. Now they're probably a 1.25%, if not a little bit more than that, better. We're seeing rates start with a 6. With an interesting buy down, you can probably get rates down with the 5 in front of them. So, I mean, that is starting more activity for sure. I think it's got people feeling a lot more optimistic about buying a house.
Yeah. And so, I mean, if we look over the last year, we saw some pretty decent wage growth. We didn't see price appreciation in housing. We are seeing rates coming down. And so, right now, it's looking to be a perfect storm of it's getting more affordable to own a home right now. And I was reading a study, or a survey that a company did earlier in the week, and just across the board, a large majority, in most cases, 70+% of the people that were interviewed, expect prices to stay where they're at, if not go up a little bit, and B, expect mortgage rates to stay where they're at, if not go down a little bit.
Yeah, I think there's a good chance. I mean, it's really interesting if you look at what the market's done over the last 3 or 4 weeks. Of course, there's holidays and things like that can affect some of the trading, but it's been really, really steady as far as, mortgage-backed securities, which has kept rates fairly steady, which has not really been the norm. It wasn't the norm in 2023 at all. The steadying of rates is probably a good trend in the fact that they're probably could inch up, but I don't know that we're going to see a dramatic gain of a point in a 5 or 6 week period like we did through November.
Yeah. So you obviously have a realtor and a mortgage guy sitting across here and saying, now's a good time to buy. And I think in both of our opinions, it's always a good time to buy. And that's always true over the long-term period of time. But if you are somebody that's thinking about buying right now, whether it's via life event or, maybe just cashing out some of the equity that you have in the house right now, is it a good time to buy?
I really do. I do believe it's a great time to buy. I mean, if you consider where we were at the end of October, rates have kind of normalized into more of a trend to where they would have been kind of historically, the affordability's up there. Plus, given the fact that there still seems to be some people thinking that rates are going to go down to 3% again, which is just not going to happen. There are still people sitting on the sidelines. I think if rates were to go down another point and get firmly into the 5s, then I think that would bring more buyers out, which would also then increase probably the purchase price.
Yeah. So what am I looking at as a consumer? Like if I'm sitting here now deciding or thinking about making a purchase in a home, obtaining a mortgage, what would get in the way of rates continuing their trend downward or at least staying flat?
Well, I mean, the biggest problem the biggest focus on mortgage-backed securities, which would be interest rates, would be inflation. And as inflation comes back down, mortgage-backed securities and interest rates will get better. The Federal Reserve Bank obviously always can get in the way, but their overnight rate tends to follow inflation as well. I mean, that's what they keep saying. They want inflation down to like 2% annually. So as inflation comes down, their rate should get better, and so should mortgage-backed security rates.
Yeah. And as a matter of fact, I mean, the Fed, they kind of took a dovish approach this last Fed meeting with their comments of, inflation seems to be going in the right direction. And as a matter of fact, I mean, good news for the consumer. Hopefully, the Fed has projected at least 3 rate cuts of 25 basis points or 0.25%. In the coming year, and hopefully that helps the 10-year Treasury note or mortgage-backed securities in coming down a little bit on.
Well, I think it will help for sure. It's also a trend of what the Federal Reserve Bank thinks is happening in the economy and what's going on with inflation. So as they tend to make their changes, that also dictates what people think about the economy. Like you kind of said, sometimes people are trading the Fed notes and minutes, not actually their actions.
Yeah. So, for those of you that are out there thinking about making a decision and you're trying to time the market, number one, like it's impossible to time the real estate market. It really is. And understand that everyone wants to buy or sell in the safe zone of buy at the low, sell at the high, which is nearly impossible. If you are thinking about buying or selling and you're waiting for the Fed to carry out, the 3 rate cuts, thinking that that's going to bring rates down way, way lower, maybe 4%, 5%. We're talking 75 basis points, which may correlate to maybe 25 basis points.
Maybe a half a point in rate.
Yeah.
It's not, like I said, we're not going back to these historic lows that we saw during COVID.
Yep. So if you are in the market to buy, sell, or invest in real estate, we'd love to sit down and have a strategy session with you. Take a look at, how does a half a point decline affect my purchasing power, my monthly payment? Are there ways to offset that by negotiating price or closing costs? And so I can be reached at rich@spokanehomeguy.com or 509-990-SOLD. And where might
I can be reached at mhogan@chimneyrockmtg.com or 509-747-1300.